We have identified that purchases being nominal account, carriage inwards being nominal account, administration expenses being nominal account, selling expenses also nominal account, fixed assets real, investment real, debtors real, cash account real. Of course, opening stock is adjusted with the purchases, sales nominal account, capital is personal account and loan personal account, creditors personal. Then I taught you the preparation of trading and P&L account. Trading and P&L account. And then this is account. Apart from that, we have prepared the balance sheet also, right? Balance sheet. And guided you what are the things will come in the trading and P&L account as well as balance sheet. In balance sheet, we have assets. Most probably assets will be either real account or personal account. And in balance sheet liability side, we have capital and liabilities. Capital and liabilities. The capital and liabilities most probably only personal account in nature. That's how we discussed in the previous class. Remember, you are aware about that the accounts are in three types: real, personal and nominal. The nominal accounts will come in the trading and P&L account. In trading and P&L account also we have two blocks. First block is trading and second block is profit and loss. Remember, this one, the trading and P&L account, this one, is it okay? Is account. But balance sheet is not an account. Balance sheet is not an account. Clear? So, these are the various accounts we have. If you are going to transfer this from the account, what is that account? Trading and P&L. Now you have to pass an entry called transfer entry. And those items are going to be reported as a balances in the balance sheet, requires no entry. Is it okay? So from this it is very clear. In trial balance, those nominal accounts supposed to be transferable to the trading and P&L account will have transfer entry. And what are they? What are they? So we have 6. Okay, we have 6. And here we have nominal accounts. In nominal accounts, purchase and carriage inwards are the nominal accounts will come in the trading account. Administration, selling and other expenses will come in the profit and loss account. Opening stock will go to the trading account, right? And closing stock will also be transferred to the trading account. That's how we have seen. Now I am going to pass a journal entry here. For this item, it is going to be, actually it's a credit balance. Transfer means this will be debited. And where it is transferred, that will be credited. So sales account is debited. And it is going to be credited in the trading account. So to trading account. Here value being 7,000. This is why we need to pass a journal entry. So this transfer entry may not be required always. Only nominal account will have the transfer entry. If the accounts are in the credit side, it's going to be transferred, means it is going to be cancelled in the existing account. If it is in the credit side, to cancel it should be debited. And where it is going to be transferred, it is transferable to the debit side. Or transferable to the trading account means it should be credited in the trading account. Similarly, purchase and carriage inward both are debit balances, so it should be cancelled. can cancel it by crediting it. Then what you have to debit? Where it is transferred, that account should be debited. So it is going to be transferable to the debit side of the trading account. So trading account, okay. So trading account debit, and I can make combined entry to purchases and to carriage and to carriage. Okay, clear. Purchases being 5,000 rupees and carriage in being 1,000 rupees. Overall 6,000 rupees is going to be debited in the trading account. I hope you could understand. That similarly, the admin and selling and distribution expenses also going to be transferred. These account having debit balance can be cancelled by crediting it. As we are planning to credit the administration expenses, selling expenses, it should be debited to the place where it goes. These items will be transferred to the P&L account. So I am going to debit the P&L account, right? So profit and loss account. Profit and loss account. In short, we can write that as a profit or loss. P/L. 2 admin expenses. 2 admin expenses. 2 selling expenses. 2 selling expenses. The admin expenses here being 1,000 rupees and selling expenses also 1,000 rupees. I am going to debit 2,000 rupees in the profit and loss account. Sir, what about the journal entry for fixed assets, 12% investment, debtors and cash? No, you don't need to pass any entry because these things are going to be recorded as a statement. That statement's name is balance sheet. That's all. So balance sheet is not account. As it is not an account, it's not going to be transferable. It's going to be recorded. Assets, debit will be recorded on the asset side and credit will be recorded on the liability side. That's all. Okay. Clear. And what about the opening stock? In the previous class, I told you it is going to be recorded the debit side of the trading account or simply. So for the opening stock, trading account debit, trading account debit. Is that okay? To opening stock, to opening stock. The value being 1,000 rupees. 1,000 rupees. Similarly, for the closing stock, the entry will be, it is going to be credited in the trading account. The entry will be closing stock account debit to trading account. Okay, then to trading account. The value being 1,000 and 1,000. Clear? Sorry, 3,000, not 1,000. Sorry, 3,000. I hope so you could now understand this part. Is it clear, right? So those items coming in the here. Okay, what? Opening stock and purchases, carriage in, and similarly here we have sales and closing stock. Here we have admin expenses and selling expenses, these things. The balance what you get here, the balance what you get here, okay, is nothing but gross profit. That gross profit is transferable from trading account to profit and loss account. For this, the journal entry is for transferring the GP. The entry is very simple. For the GP, it is transferred from trading account to P&L account. Otherwise, it is going to be credited in the P&L account and debited in the trading account and to profit and loss account. That's how we can pass the entry for the gross profit. And the balance what you get in P&L account is named as net profit. That net profit will be addable with the owner's capital account. So for that the entry will be, I am debiting the P&L account because the amount available in the P&L account is now transferable to the capital. Clear? I think so you now understand the way of passing the entries for closing the books of account means. From the trial balance, we are going to prepare the trading and P&L account as well as the balance sheet. When the journal entry comes and when the journal entry will not come. All the nominal accounts supposed to be transferable to the trading and P&L account will be transferable to the concerned account, and then the balance in the trading account is named as either gross profit or gross loss. transferable to the P&L account. For that the entry will be usually in the case of gross profit. Trading account to P&L account, or vice versa also may be possible. Profit and loss account debit to trading account in the case of gross loss. And when you tally the profit and loss account, the balance what you get is called usually net profit. Of course, the other way also correct. When there is a loss, the entry will be reversed, right? It is going to be charged to the P&L account. This is the entry. This is the entry for the net profit. In the case of net loss, the entry is reversed, right? And all the real account and nominal account, of course, you don't have any journal entry because it's only recorded as a statement. Okay, come on, copy all these things before I move on to the illustration number 2. In question number 2, again trial balance is given, and in the previous illustration, we have seen the adjustment, especially closing stock 3000. We have seen only this adjustment. In this illustration, apart from that, I have added so many additional adjustments. Now it's your duty to incorporate all these adjustments clearly, right? So you are aware about the way of recording the opening stock and closing stock in the trading account. So recording of the opening stock and closing stock in the trading account is nothing but for the adjustments of the purchases, because purchase is not really any expenses. Out of the purchases, to the extent of items consumed is the expenses, and then to the extent of consumption is the nominal account. Only to the extent of consumption being the nominal account transferable to the trading account's debit side. Those purchases not at all consumed is your asset because you are able to use this in the next year. Whatever the spending you do, having benefit for the subsequent period is not a nominal account, it's a real account. Remember, the closing stock is also a real account. As the closing stock is a real account, I am deducting this value from the purchases because the purchases component has a real account to the extent of amount or to the extent of purchases not at all used. As that portion is real account, will not be recorded in the trading and P&L account because trading and P&L account is in nominal account. Only nominal account will be recorded. To the extent of not matching or to the extent of payment not enjoyed, could be enjoyed in the subsequent period, will be transferred to the balance sheet. That's why we have to subtract, or we have recorded that value in the credit side, recorded in the asset side. That's a logic. This logic is not only applicable for the closing stock, will be applicable for all short of nominal. You purchased 10,000 rupees, right? This is the purchases, but you have closing stock rupees 2,000. What does it mean? Only 8,000 rupees worth purchases item used, right? This is used. That used is nothing but otherwise named as consumed. And this consumption is called nominal account. So purchase is not nominal account because it's a real account. There are lots of confusions among the students. Sir, purchases is a real account or nominal account? Of course. Once you purchase and use within the year or purchase and sell within the year, then it's called nominal account. But purchase not used within the year, then it's called real account. Okay. Or to the extent of non-used, this will be real account. And after the adjustment of closing stock, whatever the leftover is the used purchases, otherwise we have no more benefit in the future, then it is called nominal account. So this is called real account, this is called nominal account. Is it clear? The same happens. I paid rent rupees 10,000. After that I came to know the rent is only 750 per month. The rent is only 750 per month. For the 12 months, the original rent could be only how much? 9,000. But you paid 10,000. What does it mean? Rent is a nominal account. Yeah, of course, rent is a nominal account. But the rent what you have paid has some more value or unexpected benefit to be enjoyable in the next year. Unexpected benefit to be enjoyable in the next year. As you have the unexpaid benefit to be enjoyable in the next year, to the extent of benefit still unexpaid is not nominal account. So in this 10,000, only to the extent of 9,000 is nominal account. Balance 1,000 you have the time for enjoyment in the next year. This will be asset. So you already we have seen the assets could be either what, real account or personal account only, not nominal account. So asset account could not be a nominal account. Okay, so the rent to the extent you enjoyed the possession of the property is called nominal account transferred to the P&L account. So where you find that 1,000 rupees paid extra, not enjoyed, could be enjoyable in the subsequent period. In that case, this is asset. So asset may be either real and personal, right? Come on, tell me. This 1,000 rupees I have paid in advance. Rent paid in advance. Okay, come on, tell me. Come on, tell me. It is an asset because we have the benefits, or the benefits unexpired. We can enjoy, right? So definitely it's an asset. Now in that asset we have two classification. Either it may be real account or personal account. Come on, tell me. Rent in advance, what account is this? Is it real account or personal account? Come on, make it faster. Real account or personal account? Come on, text me. Is it real account or personal account? Yeah, come on, come on, come on, make it faster. Yeah, are you able to hear me? Hmm? Yes, tell me. Hello. Are you able to hear me?
Yes, sir.
Okay, then text me. Yes. Now, what about this one? This 1,000. This 1,000. What is this? And you have given me the answer being nominal account. No, no, no. Come on, come on. This is not nominal account. This is not nominal account. I already told you to the extent of rent paid not enjoyed, or the benefit of occupancy still exists. The benefit of occupancy is still existing. As the benefit is still exists, this is not nominal account or expenses, then asset. Asset could not be nominal account. Sir, no. Asset could not be nominal account, right? So it will be either real or personal account. Now my question is it real or personal? I have given two choices only. Is it real account or personal account? Make it faster. Yeah. Hmm. Yes, yes, yes. Okay, okay. Remember, in short, this is not real account, this is personal account. Clear? So rent in advance account is personal account. Personal account. Now, to make you understand, I tell you, I have not paid the salary and I give you 10,000 rupees. Go and pay salary. Come on, tell me. This is outstanding salary. I have not paid the salary. I told you, boy, I am not paid the salary. Go and pay the 10,000 rupees. To whom are you going to pay this amount? Come on, tell me. Come on, tell me. To whom are you going to pay this 10,000? Make it faster. To whom are you going to pay this? As I already told you, I am not paid 10,000 rupees. I hand out the 10,000 rupees to my cashier or to you. Go and settle this money. To whom are you going to pay this? Come on, come on. Yes. I don't know why you are very silent. Now, I tell you, 2,000 rupees I have not paid, or 20,000 rupees, okay, 2,000 rupees I have not paid. This is outstanding rent. I tell you, being the accountant, I have not paid 2,000 rupees and go and pay this amount. I am giving the 2,000 rupees to you. Come on, tell me, to whom you are going to pay this amount? This amount is for whom? This amount is for whom? Come on, outstanding salary is meant for whom? Outstanding rent is meant for whom? If I give you 12,000 rupees, to whom you are going to pay? Come on, tell me. Yes, silent. I don't know why you are very silent. Okay, are you there? Come on, come on, come on. Give a try. Give a try. To whom you are going to give? Yes. Uh, so long, so long. This will be to employee, am I right? This will be for employee. Is that no? Yes or no? At least this one is for whom? Owner of the property, am I right? Yes or no? So whenever I tell you it's an outstanding salary and giving you cash, whom you are going to pay this? To the concerned person, right? Okay. It means whenever it's an outstanding salary, I no need to tell you it is meant for the employee. Whenever it's an outstanding rent, I no need to tell you it is meant for the owner. Sorry. If it is an outstanding electricity bill, if I tell you to go and pay, you have to pay to the electricity company. That's all. So whenever I use the term outstanding salary, outstanding rent, whatever it may be, that represents the person to whom you have to pay or from whom you have to enjoy. Rent is a nominal account. Rent account is a nominal account. Is it okay? This is nominal account. And outstanding rent. Outstanding rent account. It means you have to pay something or you enjoy the possession right given by the landlord, owner. Now it is your duty, you are owing to the person to whom you have to pay the rent. So the outstanding rent is a personal account. What sort of personal account? It's a representative personal account, right? This is owing. This is owing. Owing means you are owing, right? You are supposed to pay. It is nothing but liability. It is nothing but liabilities. Okay. And I hope so you are now able to listen me properly. Rent in advance. You paid rent in advance. It means again representative personal account only. Representative personal account only. Because of extra payment ahead, you are paid ahead. You can possess the property for the next period without paying any rent, or the owner is liable to you, or you are owning the right of possessing in the subsequent year. Owning, okay, not owing, so owning. This is asset and also representative personal account. So I would like to tell you one important point to note here. So rent account absolutely a nominal account. Rent account absolutely a nominal account. But if I have any prefix or suffix, automatically the nominal account becomes a representative personal account. Is it clear?